On to some exclusive news on Bhushan Steel. Lenders of the company wrapped up a crucial meeting today. The company has loans worth a staggering 40,000 crore rupees, and sources are telling CNBC-TV18 that lenders are not ruling out a change in management if there is a buyer in the fray. Ritu Singh is joining in with the exclusive details. Ritu, that indeed is the big if, right? If they get a buyer, and which way is this going to go? Is this going to go the S4, way, which is the latest RBI ruling, or are we talking about a strategic debt restructuring here?
Well, the bankers we spoke to are actively considering invoking S4A for the company, which is a scheme for strategic structuring of stressed assets, RBI's latest scheme under which the debt of this 40,000 crore that we're talking about, it can be split into two equal halves. One part will have to be serviced under the current terms and regulations, and the other half can be converted into quasi-equity by the banks, where they can convert this debt into preferential shares. For now, this marathon meeting that went on with the lenders of Bhushan Steel remain more or less inconclusive, but the bankers have at least said this much, that they are actively considering a change in management. Of course, a decision on S4A cannot be taken this soon, given that they first have to get the results of the techno-economic viability study, which is a precondition the bankers have to meet to invoke S4A for any asset. Other than that, they will also have to do a forensic audit to establish that there is no fraud in the company, and the only reason for the downturn is because of economic and external reasons. Of course, remember, the bribery case of Bhushan Steel is something that the bankers fear may, hinder the forensic audit process a little, but of course they're awaiting results. This is something they're actively considering. The buyer, as you mentioned, of course, is the big problem at this point of time. Even Bhushan Steel in this meeting has told the lenders that all of its marketable assets, which the bankers had asked it to try and sell, it could not get good valuations for, and therefore has not been able to sell them. But in the meantime, for this 40,000 crores of debt, the lenders say they will continue to take at least 10 to 15% of the company's sales for repaying the debt. That is something that the company will have to forego. They will actively consider the cash flows and monitor the operations of the company themselves very, very closely. And a review meeting will be held for the same in the month of September.
All right, Ritu, appreciate you joining us with that big breaking story.